The session is going to be for 40 minutes, and we're going to have a 20 minutes time for questions. So if you have any question, you use the chat box by your right to ask your question. You first write your name and the country you're watching us from. Taking us today on business formations and agreement is Miss Ursula. Miss Ursula she's from Austria, and she's also the founder and CEO of Ubunsoft EU. I think you can get to know more about her at intep.nompro.com. So we are moving over to her. Miss Ursula, it's good to have you, and over to you.
Thank you. Good morning, and thanks for having me again. As you already said, today's topic is going to be business formations and agreements. That might be not completely new to many of you because you might already have your business formation for your company, but some might still consider what to do, and therefore we are talking about this topic today. A disclaimer at the beginning: I'm not a lawyer. I'm talking about this topic more out of a business perspective, business person perspective. So if there are any questions or you have a difficult case, you might of course need a lawyer to clarify these things. But to start and just have kind of an overview of what's possible, we look first at business formation, which is just the legal business structure of your company. And you have the choice. There's the sole proprietorship. There are partnerships. There's the limited liability company, or short LLC. There is there are actually two kinds of cooperation that you could choose. Or you could also choose to have a cooperative. So there's actually a lot of choice for you to make at the beginning of your business journey. So let's see what the sole proprietorship is all about. It's, as we can see, it's the most simple way to start a business. It is started just with your own name. So you as the owner, you have the full control over your business. There's no one else but you who is operating the business. There are not any specific kind of requirements by government regarding the sole proprietorship, but of course you might have to check which kind of business license or other local permit or whatever you might need in addition after you found out which business formation you want to use. You might have to add this to your business. The sole proprietorship is actually something that is very, very similar in all kinds of countries. And as we can see, it's the most popular type of business because of its simplicity to actually start with a business. It's a good choice for starting out, especially when you have a kind of low risk business. And for just testing your business idea. Why are we talking about low risk? Because, of course, there are also disadvantages of this very common form of business formation. It's not a separate business entity. So actually, it's you. You are the business, we could say. What does that mean? It means that the liabilities and assets, your personal ones and the ones of your business, they cannot be separated. So if there is anything that occurs, if you are having debt or any obligations with your business, this will actually mean you will have to solve these issues with your private assets. That is different in other legal forms, other legal structures, but not with the sole proprietorship. And also another thing to consider is if you have employees as a sole proprietor, you would also be responsible for anything that they might do, the damage that they might, for instance, incur, and you would also have to deal with your personal assets to solve these issues, the ones of your employees. So the revenue authority will consider you and your business as just one entity, which will also mean that in comparison to other legal forms, you miss out on some of the corporation benefits that these other legal forms do have. You also have to pay a self-employment tax as a sole proprietor. And regarding money, if you're looking for financing, then you might have a hard time to do so, because on one side you cannot issue stocks as a sole proprietor. And if you are trying to get a loan or anything similar from a bank, then you will probably realize that they are very hesitant to lend money to a sole proprietor. Actually, they might not at all do that. If you plan to have a partner in your company, then we are actually looking at partnerships. So that's the simplest form to start with someone else. When might that be interesting for you? Consider two persons that actually have complementary skills. So one might be the organizational data data type of person, and the other one might be good in sales and everything that has to do with the product or the service, probably. So that would be maybe a great fit. And all you would need to start a business like that would be a partnership agreement. And we will be talking about agreements a bit later anyway. So that's all you need. And then you can define which of the types of partnership you would like to use for your business. So there's the general partnership, as we can see, very simple, most basic type. Again, also with partnerships, you will have to check out any kind of license you would need to operate your business. And then again, the partnership agreement, where you note everything that in regards to this partnership. It's about what to do, the rights and rights that you have as partners. One thing to consider here is that all partners, again, like the sole proprietorship, have unlimited liability. So they are also, all of them are personally liable for the business. So that's kind of the similarity to the sole proprietorship. To change this situation a little bit, there is the limited partnership, LP, where the unlimited liability is actually put on one general partner, while all the other partners are having limited liability. So this gives those other partners a way to protect their personal assets in this kind of company. They then are so-called silent partners. So actually they are like in investors more, that kind of partner, and they don't really involve into the business, with the exception of investing in it. Profits generally are passed through to the personal tax returns. And the general partner, in addition, has to pay, again, self-employment tax. So his kind of part is the same as in the sole proprietorship. If that is still not enough to protect personal assets, then there's also still the limited liability partnership LLP, and this one gives every owner finally the limited liability, so that they would no longer be liable regarding anything that concerns the partnership. So these are the three types. The fourth type might be something that is maybe even only for a specific period of time. That's the joint venture formed by two or more people, and the core component is that it's for a single and specific project. So it might only last for a specific time, but that is not a requirement, not necessarily. So it could also continue indefinitely. So that's also a possibility. With this kind of partnership, the partners are not personally liable for the business. So you would need an agreement for this with a common purpose. You would have to define the share of profits and losses, and every member in this kind of partnership would just have the equal voice regarding the project and what to decide about the project. So this is joint venture. Regarding taxation, here it depends on what kind of legal business structure you are using for the joint venture. Generally, the joint venture is a separate entity, so it will pay taxes according to the legal business structure. So, for instance, if you choose to operate as an LLC, then the profits and losses would pass through to the owner's personal tax returns, just as with any other LLC that you would have used as your business formation. Generally, partnerships can be a good choice for multiple people having the wish to work together. We can find this, for instance, with attorneys that want to work together. And it's also still a way to test your business idea before you are completely sure to go for one of the other business structures that might have other advantages, but maybe also other disadvantages. So let's see. We were just talking about an LLC. What is an LLC? It's a limited liability company. And here we have the limitation of the liability of the business owners. So that is the most important thing about the LLC. That is a great way to protect your personal assets. So it's the LLC as a legal entity that is responsible for the debt of the company, and not the single owner. The taxation, regarding the taxation, it's taxed as we just read before, and we heard about it when we were talking about the partnership. It's taxed as a partnership or a corporation. The members still have to pay the self-employment tax. An LLC cannot issue stocks. That is still not possible with this form of business structure. So if you wanted to do that, you have definitely to go for the higher legal entities that we are still talking about in a second. And also here we are going to have an agreement about what people are actually expecting of the limited liability company in general. Okay, so now here we have profits and losses that can get passed through to the personal income of the owner and other members. And then there is one specific attribute that is dependent on the country that you are residing in. In many countries, an LLC might have a limited life. Should one of the members, for instance, die or want to leave the company. So in some countries, you might even have to dissolve and reform your LLC. That might not be necessary in other companies if you have special agreements that deal with the issue. In some countries, you might just be able to go on and maybe replace a member, but that depends on, as I said, the country that you are having your company in. So when would you now use an LLC? As we said, it's already a business formation that helps you limit the liability, protects your personal assets, and it's definitely something that you might consider if you are trying to pay a lower tax rate than you would with a corporation, which actually is the next higher form of business structure. Corporations are something that has to be considered very well because they are a very complex and also expensive form of business formation or business structure. There are two types of corporations that we know. There's the C and the S corporation. So the C corporation is a legal entity that is finally completely separated from the business owner. So that means the corporation itself can make profit or loss. The corporation itself is going to be taxed and held legally liable. Therefore, it offers the strongest protection for your personal liability. And you won't have any kind of problem with this kind of legal entity if the stakeholders change because someone dies or someone wants to leave the company. So you can definitely go on. The legal entity is not going to be concerned or it's not going to be affected by this. They can just go on. It can just go on operating its daily business. The S corporation is similar to the C corp. This one has been specifically designed to avoid the double taxation because it could happen that you have to pay tax for the income and also then for the dividends that might be paid to the members, to the shareholders. It allows you to pass through profits and some losses to the owner's personal income. It's also a completely separated legal entity and therefore has, like the C Corp, no problem if the structure, the people operating it are somehow changing. It can just go on doing business. So when we look at corporations, why are they so complex and expensive? Because they require an expensive record keeping, operational processes and reporting. So the whole system is more, there are more requirements for the system that a corporation has to have. Then the corporation pays income tax on its profits. Then we were saying sometimes there's double taxation regarding profit and also regarding then dividends that are being paid. And again, a completely separate life tells us that this can go on even if the founding member might die, because it's not the same. It's a legal entity completely separated. And finally, we have the advantage with the corporation that here we can have stocks. That means if you are in need of capital, you can either raise funds through the sale of stock, or you might also find banks that will be much more willing to lend the corporation money. Of course, depending on all the documents, depending on many more information, not just because of the business formation, but it will definitely be more easier. And if you typically, a corporation is a bigger business formation, you are probably going to have employees. And if you can probably offer, and if you are willing to offer them shares, that might attract well-educated employees. So you might be an attractive employer for them, and that might also be an advantage. So then some facts still that are requirements again for the corporation. We have elected directors. You might have to put their names into your paperwork, into your documents. Then it's about the shares and the shareholders. So you will have to have special agreements regarding that. Again, we have the limited personal liability protection here mentioned. And in general, when you want to go for a corporation type of business, don't forget to obtain, again, permits and licenses that might be required for your special kind of business. Register your revenue and tax authority, and also open a corporate bank, which we heard already before, that it's very, very advisable to have a bank account separated from your private bank account. So this is a separated legal entity which should and does have its own bank account. And it's even easier for you doing the bookkeeping. So finally, corporations are a good choice for medium and higher risk business, because even with a higher risk business, you still have this limited liability. You are protected. And also, if you want to raise money, as we said, it's much more easier with a corporation. And also, if you down the road plan to go public, or even if you plan to one day sell your company, then a corporation as a legal entity that is not bound to you as a person is, of course, the best choice that you can make. Finally, we would still have the cooperative, which is a form where you have members that are operating this cooperative, and they are operating it for their own benefits and for using the services of this cooperative. So the profits and the earnings are shared among the members. When I think of cooperatives, then here in Austria, for instance, we even have one or the other insurance company that is a cooperative, and that the consequence of that is that their offers are equally good as those of other companies with other business structures, but their premiums are actually lower because their profits kind of get shared with their members, and everyone who is having an insurance with them is actually a member. So this might also be interesting for one or the other business idea. In general, which questions might occur? So there's one question regarding what about if there is debt, or what about if there is something coming up where you would have to go, maybe even to go to court. Could you actually, as a business owner, deal with it? Do you have enough private assets to deal with it? And if not, then you probably don't want to use the sole proprietorship. You definitely want to have something else as legal business structure. So probably an LLC or a corporation would be a better choice. If your business needs financing, again, we said as a sole proprietor, you will definitely have a harder time than if you would have a corporation, for instance. So these are considerations from the beginning. You should probably know, not probably, you should know whether you will need a lot of money, whether you will be fine with small amounts of finances, and that might also determine which kind of business entity, business structure you are going for. And then again, the hint for the business structure regarding employees. Actually, you can have employees with all the business structures, but as we said, the sole proprietor will be liable with his personal assets for everything the employees are doing. Whereas with an LLC or even with a corporation, this is kind of separated. This was now about business formation, so your legal structure, and that is one step in your business journey, but definitely also part of it when you chose your business structure are business agreements. And there are a lot of business agreements that you might need depending on what you are kind of what your business is and which kind of stakeholders you might have, you might deal with in your business. So we see here the definition of an agreement. It's a legally binding plan or decision that two or more persons or businesses have made. So legally binding, you want it to be an agreement that really is worth the paper that it is printed or written on. So therefore, you will have to check for a few things that the agreement should actually cover, and and things like the agreement and signatures and so on, as we will see in a moment. So why is this so important? Because I'm again and again, and I have to agree, I have to admit, I also have done it. Here in Austria, also an oral agreement just spoken out by two people is definitely a valid agreement. The problem might be how to prove it. But if you have someone that you want to work with, that you want to have business with, and you say this is a person, a simple handshake will also be enough for having an agreement, then you might do that. But whenever something happens, as I said, it will be very difficult to actually prove what was the agreement really about. And we can see this in a very simple example. If two people are talking about the same topic, they are talking about what they want to agree on, it might still be something completely different that they actually think that they are agreeing on. Yeah. So as we can see here, they are not talking about the same thing. That might be the first consideration why a written agreement might be very, very useful. So why business agreements again? Because it's not enough that you are offering something to someone else, whether that's a product, a service. It's also very important that this other partner this other party is actually accepting your offer. And acceptance can be proven by a signature on an agreement. So it's a record of commitments. What are the two parties or more gonna do? It will prevent conflicts, because if you wrote it down, whatever it was you decided on, if people reviewed it and agreed on it by putting the signature on it, then actually when there's a conflict, you can always take it out, read again, what was it exactly what we were agreeing on, and that will mitigate risks of maybe even being sued or having to sue someone, because you just have the agreement. It's also important way to communicate and maintain the compliance, which might be interesting when you are dealing with, again, with banks, for instance, or also other partners, because whoever wants to work with you, to have a deal of any kind of with you and your business, they might be interested in what kind of agreements does this company generally have, how are they doing business, is it documented, and so on. So you see, agreements are not just for the two that agree on something, but actually also for other parties. They can be very interesting. And if you are looking for finances and the company is going to be checked out by a bank, these agreements that you have in place might help you get the financing. Very important, before you enter into any kind of agreement, you should check out the values of the person or the organization, the company you want to have the agreement with, which can be done by a due diligence. So you would definitely want to know more about your partner before you enter the agreement. So how can you do that? You can ask questions directly to the maybe owner of the company. You can ask employees. You can ask if you know some customers or some suppliers that are working with the company. You can ask them how it is to work with this company. So you can do several things to find out whether this person or corporation actually is a great fit for an agreement. Because there might still be people out there that are not completely serious about their business, and then you might have an agreement and they still don't care about an agreement, and you will have troubles, and it would not be necessary, not in all cases, if you just would have done your due diligence at the beginning. So which kind of stakeholders could be involved in operating your business? Of course, it's the business owners themselves. It could be investors, employees, clients, and any kind of service providers and vendors. And there are different agreements that you are going to put in place for each of these groups of stakeholders. So if we are looking at business owners, you would have the founders agreements. That is something that you do completely at the start of your business. So if you have a partner that you're founding your company together with, you would set up an agreement that specifies exactly what each of you is going to do, what they are going to be responsible for, and all these kinds of things. Later on, you might even bring more partners on board. Then you might want to have a partnership agreement, which might be, of course, a bit different to the founders agreement, but could also have some similar information. Then you also, if we are thinking about an LSC and so on, you could have, you should have a shareholders agreement that specifies exactly not only the percentage of shares that someone might get, but it might also include, are the shares gonna be paid out immediately and completely, or is this going to be over a period of time, depending on what you actually are looking for in those shareholders. Employees, yeah, they should of course have a contract as well. And what you should probably think about very thoroughly is to include exactly what you would want to see regarding intellectual property assignment and also non-competes. So intellectual property assignment, think about you are hiring a programmer. The person is developing a program which works fine, which is great. And then the person says he has the right over this, the right over this, the intellectual right over this program that he actually designed during his working hours. And then if you don't have an agreement, this might end by going to court. If you have an agreement that definitely states everything that is developed, created, whatever, in the company during working hours is, of course, property of this company, then you spare yourself all the time and the troubles as if you would not have something like that. Non-competes, what are we talking about here? Non-competes means you want to define whether you allow or don't allow someone to, when they leave the company, immediately work with the competition, or whether this should be only after a time, because depending on how much information an employee has, this might really be a risk for your company. So think about an employee that is like a managing director in your company. That one would have actually as good as all kinds of information, knowing about your vision, your mission, your strategy, your plans. And if they leave the company, they could just found their own company with all the information that they actually gained as an employee. So keep that in mind, and maybe have a lawyer write this kind of agreement so that it is really valid. And then also, if you want to give employees shares, then of course you also describe what exactly is gonna happen with these shares. Clients, if you have products, you would have like sales and purchase agreements. If you have a service that you're offering, then you would have a service agreement that exactly states what you are actually expecting from the customer, what the customer can expect from you. So that is very important. And then also you might work with any kind of service providers. You might work with a consultant, then you might have a consultancy agreement. You work with vendors, then you might have a supply agreement. Sit down and write these agreements. They can save you a lot of time and headache down the road when you start at the beginning having these agreements, thinking about these agreements, maybe even updating the agreements, not the ones that already got signed, but those for the next ones over time, when you see that something might have been forgotten. So this is actually also already something that is one of the common business agreement mistakes. What I just mentioned would be the lack of consideration. So you forgot something, yeah, which is bad, because after everyone signed, you cannot then put in something into the agreement that was not in there before. Also very necessary to consider is it could be the wrong parties signing the agreement, because only individuals or legal persons can enter into an agreement. So that has to do a little bit with the due diligence again. Before you sign an agreement with a business owner, make sure that you are actually dealing with a business owner that has a registered company. If they don't have a registered company, we are back to the beginning of our definition of agreement, which said it should be legally binding. If it's actually just a private person, that is not the kind of business agreement that you would want to have. And then, similar to that, the improper execution. So let's assume you are dealing with a company that has employees. Please make sure that the employee that tries to sign the agreement even has the authorization. So there are people who would be willing to sign the agreement, but actually this would again not lead to a legally binding agreement because they would not even have had the authorization of the manager. Then we have an offer without acceptance. I hope that would not happen so often. That would be you send out an offer and actually the other party did not even review it or did review it, but they didn't sign it. So without the signature of at least two parties, it's also not going to be a legally binding agreement. Okay. What if you finally actually find out that there is a breach of your contract? What are you going to do? And if we assume that you did your due diligence at the beginning, that you know the values of the other person, that the person is serious and so on, so assuming that, the very first thing that you should, of course, do is to talk about the situation and maybe already find a solution for it. Maybe you want to alter something in the agreement, and sign the agreement again with the update. Or if that won't help because positions are completely different and no one wants to change their mind, then you might have to terminate. And then you definitely would have to check for compliance. What does that mean? For instance, you have an agreement with someone else, and this someone offends you, and now you are angry and wanna end your partnership, your kind of agreement, and then you just write an email, for instance, saying, I don't want any longer, I quit. That might be a big mistake because you might have signed an agreement stating exactly how you would be allowed to exit the contract, to exit the agreement without being accused of breaching it. So even if the other person would offend you, if you just say, I quit, and that was not what was stated in the agreement as the kind of termination of this agreement, then you might be the one actually that is breaching the contract. So please take care of that. And only if nothing else works, then you might have to go to court to sue the person for damages for specific performance that they have to do, that you want to see. But that should actually be the very, very last step. So I'm at the end of my presentation. I hope I was able to give you an overview of what kind of business structures there are for your business and what kind of agreements you should definitely have in place. And I'm happy to answer questions should there be any questions. Over to Jessica.
Thank you, Ms. Osler, for that interesting presentation. Questions are yet to come in, so please, if you have any question, do well to type it out and send it to us so Ms. Osler can answer those questions. On stage, we have Mr. AJ Smart. Mr. AJ, good to have you with us today.
Jessica, thank you very much. I mean, that was a great presentation because I've actually been almost, so I would say, when starting up, being a victim of wrong business formation from the beginning, which, with the lack of proper understanding of what type of business legal structure I ought to have, and of course, these things always don't come without consequences. You would either have to deal with losing either the business or maybe one way or the other, you would have to lose something. Yeah, I don't think there is any miracle as she really mentioned. So honestly, I think this is very important. And I know for many startups, actually, most people are operating their businesses, but they actually have no clue, concerning this important piece of information. So, Mrs. Ursula, thank you very much for taking us through that. In as much as that sounds very common, it's not at all among entrepreneurs because, as you know, the wise people will say that common sense is actually not very common. So we really appreciate you taking through that insightful, presentation. Thank you very much, Jessica. Over to you.
Thank you, Mr. AJ. I think the presentation was very well understood. There are currently no questions, but there have been amazing feedback from the viewers. So thank you so much, Miss Osla, for the wonderful presentation. Also, a big thank you to Nompro Technologies for this opportunity to be able to reach out to young entrepreneurs. Thank you to our sponsors as well, Ubuntu Soft, Africa's Business, Ashwini's Collection, and Eduzam. We really appreciate you all. Today's survey link has already been linked to the video, so you can check it out at the description box and ensure you fill it out. Miss Osta, I don't know if you have any concluding words for us.
Well, as I said, just consider everything very well. Take the time, although I know operating a business can be super stressful, but I think there are some things like not only the structure, which you choose once at the beginning, maybe, but all the agreements. Sit down, think about these things. Look for templates if you want. There is a lot on the internet that can show you how a specific agreement could look like. But also, you might nevertheless want to involve a lawyer that has the final say about the agreement, because it really can help to avoid spending a lot of money, a lot of time, all the concerns that could come up down the road when you are not having all these things in place. So please consider these things even in your very busy day, and then you should be fine to go. Over to Jessica.
Thank you, Miss. Some questions just came in.
Mhm.
There's a question from Mugala from Uganda. The question is, which type of business is liable to small businesses and what are the advantages?
Well, as we said, that depends on how much protection you actually want to have with your personal assets. So, if it's a low risk business, where you don't where you might not have too much of a risk of having to deal with issues, having to deal with debt or any other obligations of the company, then you might be fine as a sole proprietor. Um, Also, the kind of partnerships. But as soon as you really don't want to be involved with your personal assets into all these things, it's better to go for these separate entities, and you might want to see to actually have an LLC or a corporation. But that also depends, of course. on how much you can invest, because like a corporation, we said that would be very, very expensive, and there are more requirements to actually found a corporation. But nevertheless, if you are working in a more higher risk or even high risk business, that might definitely be the way to go, just to be protected. That's very important. Yeah.
Thank you, Miss Osla. There's a question from Miss Ijoma. The question is, can a sole proprietorship be converted to an LLC?
Oh, this is a very legal question. I would not dare to answer that. As I said, I'm not a lawyer. So if you already have a sole proprietorship, please contact a lawyer to ensure that if it's possible, that you are actually taking the correct steps to do so. Okay.
Okay, thank you, Miss Osla. Another question from Mr. Yusuf. The question is, for small businesses with limited resources, form a sole proprietorship or an LLC? And then also, how does the cost and complexity of each option factor into this decision?
Yeah, actually, it factors a lot into the decision, because, I mean, see, like here in Austria, yeah, people would love to have this kind of LLC. It's called differently here, of course, but it's a kind of LLC. But they would, in former years, they would have to have like capital of 30,000 euro to be able to even found an LLC. Now they reduced it to 10,000, but still there are a lot of potential business owners, or yeah, gonna be business owners that still don't have the 10,000 euro. So you would definitely have to clarify how much it will cost in your area, where you are actually uh, looking to found the company, and then compare that. Whereas like sole proprietorships and partnerships, they normally don't require to have a specific amount of capital of money to start. So this might be something that is not great, because you would like to. Why not have a corporation? Yeah. But on the other hand, if you don't have the capital that would be required in your country, you might just start with the smaller kind of business structures. Um, yeah, that's that's the answer to this question. And then again, it depends on the country that you are in, because this is definitely something that will differ from country to country.
Thank you, Miss Osla. For questions about the survey link, sorry, I just noticed the wrong link was posted, so we'll be updating that as soon as possible. There's a question from Mr. Frederick. The question is, or scenario, I have a company called Eden ER. My partner is somebody who we share equity with. What is the legal structure of our company?
So I would actually expect that there is an agreement that would actually define this. But again, this is a very legal question, and I would suggest to go to a lawyer and ask the lawyer about the structure you have. But as I said, normally you would have to have an agreement that states what kind of partnership you actually started with your partner.
Okay, thank you, Miss Osla. Another question from Mr. Steven. The question is, would it be advisable for a startup to start as a sole proprietor?
Yes and no. Again, if you are intending to try out your business idea, you know that at least from the beginning it might not be a very high risk business, and you're just starting out, then it's definitely a very very good option. And as we said, a sole proprietorship, even with the disadvantage of being personally liable for everything, it's the most common business structure. So most of the business owners, most of the companies that are starting are going to start as a sole proprietor. So it's nothing bad, and as long as you keep operating your business properly and you're not piling up debt that you will have to actually deal with your private assets with, you should be fine to operate your business. Nothing should happen to you, not necessarily. You can work as a sole proprietor for a long time, but when it comes to you knowing that you are looking for financing, that might be the point where you will find out that sole proprietorship is maybe not good enough, kind of, yeah, just for the financing, not for the operating of the business. Or if you find out that maybe you over time you add another business field that you now are working in, and this one is definitely a more higher risk business field, then you also might think about your sole proprietorship no longer being the best choice, and then you are going to see to get an LLC or a corporation. So that might be the considerations. But there's nothing wrong with the sole proprietorship. Most common, 70% of all businesses are sole proprietorships, and yeah, you can
Thank,
definitely start with it.
thank you, Ms. Osla.
You're
The
welcome.
last question is from Mr. Yusuf, and the question is, can you discuss the tax implications of forming an corporation, and how should business owners weigh these factors when choosing a corporate structure?
It's about taxes again. So, no, I'm not going to answer this question. And the reason for that is we are going to have a topic about accounting and taxation tomorrow. So, I would actually suggest to ask the question tomorrow when it is about taxation. And it's just funny that that might be a consideration. So, if I might answer it a little bit. So the taxation, yeah, of course you're going to look into it, but someone once said something very, very true, and that of course you will always try to not pay unnecessary taxes. Let's put it like that. But honestly, if your company is eligible or required to pay taxes, then congratulations, because that means you are successful. That means you are earning money. That means you can support your community. If your government is even doing something good with the money, but that's another thing. But it's something that actually shows your success. And not having to pay taxes is not something good, not something that you could brag about, because it actually shows that you are you are either not serious or you're cheating. And I don't think that any one of the participants here in the program would want to do one or the other. So pay taxes and be happy because you're successful. Over to
Thank
you.
you. Thank you so, so much, Ms. Osla, for the wonderful presentation and the answers to all the questions. Really appreciate you and your presence with us.
You're welcome.
And thank you to you all for joining in today. The survey link has just been updated, so you can check it out at the description box. It is available for you to answer. Thank you again, and we hopefully will see you again tomorrow, same time, same place. Bye for you at Inter.
Bye.